If we continue on that trajectory, as we said in 2002, we will have no option but to raise taxes, and quite significantly by several percentage points of GDP.
Our system treats very wealthy older individuals as if they are very poor.
I think the government will go back to Bill Shorten and Chris Bowen's disastrous 2019 assault on investors, Chris, that you and your viewers would be very familiar with.
Of all the contentious policies of the Labor Party, the one that has many people spooked most is capital gains tax.
Ever had that mate who borrows your ute, returns it with an empty tank, and then lectures you about fuel efficiency? Well, that's basically Labor's approach to capital gains tax right now. They want to double the tax you pay on your investments, claim it's for housing affordability, and somehow expect you to thank them for it. While you've been watching the Olympics and arguing about whether pineapple belongs on pizza, Labor's been quietly sharpening their tax knives. They're planning to slash the capital gains discount from 50% down to 25%, which means you'll pay twice as much tax on your investment gains. Right, let's talk about the McKell Institute, Labor's favourite think tank that comes up with brilliant ideas and wraps them in fancy economic modelling. These policy wonks have just released a paper that's basically a love letter to Jim Chalmers, begging him to mess with capital gains tax in the name of housing supply. Their master plan? Increase the CGT discount to 70% for new apartments, but slash it to 35% for existing houses. So if you're smart enough to invest in established property, you get punished. If you gamble on off-the-plan apartments, you get rewarded. Makes perfect sense, right?
And we could also see negative gearing, which for asset-poor people, for nurses and tradies who are buying their first home, is critical to reduce interest costs.
Yep.
That will be under the gun, and I think we'll also see a renewed assault on dividend imputation.
They reckon this could deliver 130,000 additional homes by 2030. That's suspiciously precise for something that depends on human behaviour, market conditions, and about 50 other variables they can't control. Edward Kavanagh, the McKell Institute's CEO, had the nerve to say Labor has resisted change to the CGT for too long. Too long. Mate, they tried this exact policy in 2016 and 2019 and got absolutely smashed at both elections. Bill Shorten learned the hard way that Australians don't appreciate politicians treating their wallets like a community piggy bank. But here's the real kicker. Kavanagh also said the tax system should be better calibrated to achieve our social aims. Social aims? Since when did paying tax become a group project? That's some next-level spin right there.
Commitments and investments that have been made by the current government and some of the commitments in the election are actually demonstrating that they are looking at, taking this very seriously.
While the McKell Institute provides the fancy economic jargon, rank-and-file Labor members are doing the political dirty work. They're pressuring Jim Chalmers to curtail the 50% capital gains tax discount, which is politicians speak for let's take more of people's money and see if they notice. Yesterday, Premier Chris Minns has jumped on the bandwagon too, saying he'd encourage the federal government to look at CGT reform. Fresh look? More like a fresh grab at your investment returns. When politicians start talking about encouraging tax changes, hold on to your wallet. The pressure is building from multiple directions. Labor for Housing, yes, that's actually a real group, wants to use CGT savings to scrap GST on public housing materials. So they want to take money from private investors to subsidise government housing projects. That's not reform, that's Robin Hood with a spreadsheet.
The key promise of stage 3 tax cuts, I think everything's now on the table. I think negative gearing, capital gains tax, franking credits, these are all Labor policies.
If you think Labor's proposals are rough, the Greens want to go full nuclear. They're calling for Labor to completely eliminate the capital gains tax discount. Not reduce it, not reform it, completely nuke it from orbit. The Greens reckon this is Australia's only chance to fix the housing crisis. right? Because nothing says housing solution like making property investment as attractive as a root canal. They want to use the money saved to fund more public housing, which sounds noble until you realise they're essentially saying, let's destroy private investment to fund government projects. It's economic vandalism dressed up as social policy, and they're not even trying to hide it anymore. Let me break down why this will absolutely wreck your retirement plans. Currently, if you hold an investment for more than 12 months, you get a 50% discount on capital gains tax. So if you make a $100,000 profit, you only pay tax on $50,000. Under Labor's changes, you'd pay tax on $75,000 instead. That's a 50% increase in your tax bill. For someone in the top bracket, that's an extra $11,250 in tax on a $100,000 gain. Congratulations, you just got charged a success penalty for making good investment decisions. But it gets worse when you factor in inflation. Let's say you bought a property for $500,000 10 years ago and sold it for $800,000. Under the current system, you'd pay tax on $150,000 of that gain. Under Labor's system, you'd pay tax on $225,000, an extra $75,000 in taxable income. Many Australians have built their retirement around property investment, using it to supplement their super. Labor's changes would slash these returns and leave people scrambling to make up the difference.
Labor says that it faces tough choices in the budget. But if Labor chooses to keep their stage 3 tax cuts, negative gearing, capital gains tax concessions and fossil fuel subsidies, Labor's not making tough choices, they're making bad choices.
Labor keeps pushing this fantasy that higher capital gains taxes will magically create more housing. It's one of those ideas that sounds reasonable until you think about it for longer than it takes to boil an egg. Property developers and investors respond to incentives. When you make property investment less profitable, you get less investment, not more. It's basic economics. If you want less of something, tax it more heavily. If you want more restaurants, you don't increase restaurant taxes and hope for the best. The McKell Institutes claim that their targeted approach would work, is based on the assumption that investors are sheep who'll just follow whatever tax incentive you dangle in front of them. Real investors look at after-tax returns across all options. If you make property less attractive, they'll put their money elsewhere, overseas property markets, shares, or just leave it in the bank. Here's what's really happening behind closed doors. Labor needs money to fund their spending promises, but they know raising income tax or GST would be political suicide. So they're targeting capital gains because they think it only affects wealthy investors who probably don't vote Labor anyway. It's classic Labor strategy. Find a group you can demonise, blame them for a problem, then tax them more as the solution. Never mind that many property investors are ordinary middle-class Australians trying to build wealth for retirement through hard work and smart investing. Jim Chalmers is caught between a rock and a hard place. He's got pressure from Labor members, think tanks and the Greens to act on CGT, but he also remembers what happened to Bill Shorten. The question is whether Chalmers thinks the political environment has changed enough to make these policies survivable. The upcoming Economic Reform Roundtable gives Chalmers political cover to consider these changes. He can claim he's responding to expert advice rather than implementing Labor ideology. Smart politics, terrible policy.
Those who are lucky enough to buy their first home have had to go into so much debt that recent increases to interest rates are pushing far too many to the brink.
If you've got any investments outside your family home and super, Labor's CGT changes would hit you hard. Property investors would see their after-tax returns slashed, making property investment about as appealing as a cold shower in winter. Share investors wouldn't escape either. The CGT discount applies to all assets held for more than 12 months. Your share portfolio, managed funds, and other investments would all cop higher taxes when you sell. Small business owners would be particularly hammered. Many rely on selling their business as part of retirement planning, counting on the CGT discount to maximise their after-tax proceeds. Labor's changes would significantly reduce the value of these businesses to their owners. Even if you don't currently invest, these changes would affect you indirectly. Higher taxes on investment returns mean less capital available for business expansion and job creation. When you punish success, you get less of it. Labor's push to double capital gains tax is economic vandalism disguised as housing policy. They're promising to solve housing affordability by making property investment less attractive, which is about as logical as trying to increase restaurant supply by taxing restaurant owners more heavily. The real agenda isn't housing affordability, it's revenue raising. Labor needs cash for their spending promises and they think CGT is an easy target. But the biggest losers won't be wealthy property moguls with teams of accountants. The biggest losers will be ordinary Australians who've worked hard, saved money and invested wisely to secure their future. The housing crisis needs real solutions. Fixing planning systems, increasing land supply, reducing construction costs. It doesn't need politicians punishing investors through higher taxes and hoping that somehow leads to more housing. Labor's capital gains tax grab is bad policy wrapped in good intentions. Don't let them convince you that taking more of your money is somehow good for housing affordability. It's not. It's just another tax grab from a government that thinks your success should fund their failures. To see the latest Australian crisis, click this video here.